Hey guys, Scott here. I'm just doing my daily work, and there's a couple of things that jumped out at me and looking at the tape today that I think is probably going to be useful to discuss. So what I want to look at here is how the market character changes and what effect that's going to have on your trading. So if we look at, first of all, if we look at this section of the tape from here through here, we have a very steady move up. So we have not too much increase in volatility. We have, mostly every day is going up. The pullbacks are limited to single days. And then at this point, we start to transition into a trading range and a low volatility trading range here. Now, this type of price action is going to get you chopped to pieces if you're doing certain types of systems. So my own systems perform really poorly in this low volatility sideways phase. And why is that? Because I'm getting long on the breaks of highs and short on the breaks of lows. And you see a lot of the time we see a break of a bar high and then it goes back down, and a break of another bar high, doesn't go up, goes down. We're just seeing a choppy mess. And once we go from there, we've got this. From this bar, we can see a section of price action which is just demonstrably different. So if we look at this, this is a trading range that's a high volatility sideways period. So why is it high volatility? It's high volatility because we've got big candles. We don't need an indicator to see that we've got big candles, because here we have small candles and here we have big candles. So big candles is high volatility. So what we have here is we have a two-legged pullback which has not done significant damage to the overall tape. If we zoom back out, we can still see that the uptrend is very much intact. So the thesis that we're going to go for another leg is intact. Now, after this bar here, we have a successful retest of this low. So we have the market going up strongly, which is one of the key indicators of trend moves that are going to have legs. We have a successful retest. So this is the market trying to go down, rejecting the downside thesis and going up. So at this point, we want to be long on a break of the high of this bar. So from here, we really want to be long this market. And not only do we want to be long this market, but we want to be long with a stop at the obvious place for a stop, which is here. We have a nice trade. You can see this stop is never threatened. If the uptrend is intact, this should never be threatened. Now, if we look at this up move, we have just a very steady, strong march upwards. Now what we have here is a sideways pullback. The bearish thesis has been rejected, but we're going up. But we're going up in a very steady fashion that could continue for some time. So what we have to expect when we look at the 5-minute chart, this is how it looked before yesterday, is that we have micro gaps. We have no increase of volatility that would indicate capitulation. We have a slight weakening. So we have a larger range, a slightly smaller range, a slightly smaller range, and a slightly smaller range again. So we have a market that's going up, but it's going up and running out of puff. This probably still has a couple more days in it. 1, maybe 2. So we have to expect that the highest probability is further gains today. So we become slightly biased towards the upside if we're trading intraday. Okay, so I've loaded up a 5-minute chart. You can see that the period with all this volume is yesterday's session, and we're heading into the open today. So what have we seen? We saw yesterday in opening hours, we have a very strong bull move up, and then we see some choppy price action running it back down, profit taking, in the after hours session. Now this is extremely common. So the common thing is a clear and one directional move in the New York session, and then choppy sort of profit taking trading range. So here you can see that we've got clear support around here, which is violated to the downside. and it's going down, but it's going down in a very choppy two-sided price action with people getting set long before the open. To me, this looks like the sort of price action that you would not want to trade at all. This is the after hours in the after hours session in the emini contract is generally made of lows. So let's look at the open and see how it started to play out. Okay, so the first couple of bars, we have a big move up and a big move down. This is nothing yet. This is an opening tug of war. So I would still be alive to any possibility, but I would be biased towards the upside at this point. Okay. So at this point, we still haven't got an actionable trade, but we see a market which is in a tug of war between buyers and sellers. So when that tug of war is resolved, one way or the other, we want to be on board. Okay. So here we see something which is interesting. We see a strong move up with a micro gap. This is a 5-minute chart, remember. And we see 3 overlapping choppy bars down. This counts as a retest of the lows. You could, if you're an aggressive trader, get long on a break of the high of this bar, which hasn't happened. Okay, this is looking more and more like a bullish breakout, because one of the things that we see in trading ranges that are going to break out to the bull side is we see an increase of buying pressure before they go. Okay, at this point right here, we have a breach of the obvious trading range here. You want to be long now. You just want to be long. Okay, we have the retest of the breakout. Again, very common. If you didn't get long, you would want to be long on the break of this candle here. Now, we have very convincing price action to the upside. We have an expanded range. We have some profit taking at the top. This looks good for further gains. We have further gains. We have further gains. Now, if one of the things about breakouts that have legs is they tend to have pullbacks limited to single bar pullbacks. We have micro gaps like we have here and here. We've got some profit taking coming in, so it's not all smooth sailing. And we have a weakening range here. We have two-sided price action here. Okay. This bar here with the volume spike all on its own is a sign that this run is getting somewhere near the end. And we see some pullback, which is abnormal there. I would want to be out of any long at this point. Certainly out of any long at this point. And what we would expect now is a choppy transition, at least to a trading range, or a trend to the downside. Could be wrong. Okay, so what do we see? We see more substantial pullback. This is the first pullback. After a move like that, it wouldn't be unreasonable to expect another rally. So we're waiting for the second leg down, which we haven't got yet. Now we have. Now any retest of this low is probably going to be worth buying. I would buy a breakout of this of the upside of this bar with a stop below here, which never happens. Okay, I would call this a retest of the lows. I would want to be long here with a stop below here. Okay. It seems likely that we're forming a trading range here. This is not characteristic of a run like this. So what we can expect is just choppy mess to attack the old highs. May get there, may not. Probably won't. Okay. So again, what we're seeing is very normal trading range behavior. Arguably, we're somewhere around the top of a trading range. Maybe the trading range is up here, maybe it's here. I don't know. I'd want to be out of the long then. I wouldn't consider the risk-reward ratio good for holding. and we have the end of the day's trade there. You can see the volume dropping off, and what we'll most likely see is what we saw in the previous day, which is a steady and smooth move during the day, and then at the end of the day some sort of profit taking. Because as we can see, this daily move is running out of puff. The range is getting weak. The range is getting smaller and smaller as we go on. Okay, the next thing I want to show you today is a daily chart of the sugar futures contract. So the current contract is March next year. Now, I want to show you this early part of the tape is a straight one-way trend. This is a very strong and smooth trend, and what we're looking for is signs that this trend is over. Now, very obviously, this first bar here is completely inconsistent with a further downtrend. At this point, if you're a trend follower and you're short and you've got a lot of profit, you have to be very nervous, and you have to be starting to think about banking your profit. Now, at this point, bottom pickers are going to be expecting another trend up because we have this recency bias, and we always incorrectly expect a mirror image of what just happened. So if we see a downtrend, we naturally think uptrend will follow, but that's not the highest probability. The highest probability is a choppy, messy trading range. And you can see this is exactly what we've got here. We've got a choppy, messy trading range, which could resolve either way. So after this bar, the bears will think that it's probably going to resolve downward. We're going to break this old support and go on another leg down. This could happen, easily happen. But if we're not going to do that, what we can see here is we're somewhere near the bottom of a trading range. Now, when's a good place to buy in a trading range? A good place to buy is the bottom. If you didn't buy that bottom, this here is a retest of the low. So what we have is we have a low here, we have a move up, and we have a move down which does not break the low of this candle. That is the market trying and failing to break fresh lows. If we get any further strength, if we break this high, I want to be long this market. And I want to have a stop here. And where is my target? My target is somewhere around the top of the trading range. Somewhere a little bit below it. So you can see the distance from here to here is our risk, and here to here is our target. We have about a 55% win rate on this trade, but we have 2-to-1 risk reward. So if you work out the maths on 55% odds of getting double your money back, that's a betting odd. Now, our job as traders is to take rational trades and take rational bets and do it again and again and again. This is a rational bet, so I'll be taking this one.